Hi everyone, let's talk about Shyft Group, formerly as known as the Spartan Motors, manufactures and assembles specialty vehicles for the commercial vehicles and recreational vehicle industries in the United States and internationally. This is basically based on fundamentals. Very rare company that I researched. This is on the yellow side. There's a past performance 6 out of 6, health 5 out of 6, future 5 out of 6, and valuation 3 out of 6, and dividends 0 out of 6. Market cap is 1.5 billion. Trading is happening 25% below the site's estimated fair valuation. Earnings are forecasted to grow over 26% per year. Earnings grew by 45% over the past year, but there's a significant insider selling over the past 3 months, and there's the competitors. There's actually a bigger one, the Federal Signal, for 2.4 billion. Anyway, the price history. So we see the auditor changes, client updates, expansion, board change, seeking acquisition, dividend affirmation, and that is leading to the shareholder return of 1-year return 111%, outbids the US machinery industry, also beats the US market. But anyway, price volatility considered as highest. And let's look at the fundamentals. Revenue 816 million, earnings 54 million, and basically market cap is 1.5 billion, 1.49. Valuation side, based on simple Wall Street, fair valuation should be around $56. Tip ranks has 48, that is meaning $14 per share, and in good scenarios 12-month forecast is $50. Analyst rating consensus shows moderate buy on the 2 buy, 0 hold and 0 sell. Market Watch has a little slightly better stock price targets, 55 at highest and lowest 46. That is on average 49.40. And future growth for the company is forecasted annual earning growth 26%. As I said, they are profitable. That is very good. And earnings per share growth is forecasted as well as to grow. And past performance, they managed to increase their annual earning growth by 42%. They had negative earnings back in 2016, but they managed to increase them and be positive. Not so much of the profit margin, so it's basically from 2% to 6.7 at the highest currently. And financial health side, we see that they do have a depth, but they do have a lot of equity, but there's a big but. So the cash level is not covering the level of depth. Cash 4 million, equity 225 million, and depth 37 million. Basically, debt to equity ratio is 16%, and it's considered as satisfactory till 40%. Balance sheet looks mostly green. They are paying dividends, and current dividend yield is 0.24%. I guess they're paying 10 cents. Yeah, so there's the dividend yield and also the dividend per share. So 10 cents per share per year, and the dividend yield were in the highest point of the 2.8 back in 2015, but currently it's 0.2, so not much, 0.24, yeah. And current payout to the shareholders is 6% paid as the dividends, and it's forecasted that future payout to shareholders would be $4 per share. 4% would be paid as the dividends from the earnings. And let's keep the management to the insider transactions. So there's two individuals, independent director and president of specialty vehicles, have selling the stock this year. March 150,000, June 206,000, a few days later 241, and on the August was this one, independent director selling 800,000. Max price $40. Ownership breakdown. So currently institutions holding 80% of the company, general public holding 11, private companies 5.5, insiders 3.2. Top shareholders, we see BlackRock on the top, decreasing 6.4%. Eberaldian PLC increasing 108%. There's a Vanguard also, almost 3% added. And actually there's on both sides. So companies, but I don't see, for example, significant movement from or to another side. This one is the biggest, so 108% added. And Finviz shows that this is actually trending to upwards. There's the strong support level, I guess, at the $34 per share, and you see these two lines. This is the tunnel that is currently showing that the price could drop possibly to the $38 per share, but could be bouncing back to this maybe $45 per share. So there's the tunnel. So if you would loading this up, try to load at a multiple time and diversify by time, diversify by industry and by market cap. And if the turn to diversify with this company, try to add 1 to 3% of your portfolio. And yeah, basically this technical analysis shows that it's better to buy at some around $38 per share. And Simple Safe Dividends shows that they were not increasing the dividends since 2016. They actually 2005 they decreased the dividends, and since the 2006 they have not increased that. And yeah, actually they decrease it. I guess they decreased since the September 2020 to the once again to the half. So currently annual payout is 0.05, but somehow it's not showing here. I'm not sure. This is actually the next dividend payment is actually they paid on September 15th, so a few days ago. But basically it should be around $0.025 per share. And let's check it. The earnings per share is growing, which is good. Shares outstanding growing as well. Not a significant movement, but anyway, they're growing. Total sales volatile, but still they managed to increase the sales, which is very good. And yeah, this slide shows that the 1 year return is 123%. Since the 1st January, this is 52% up. 5 year return is 3 142%, and max side, yeah, this is almost 10,000% at the all time. So if you would bought it in the 1984, you could be profited a lot. And you see the crisis, so the dot-com crisis did not affect much on this stock, but 2008, so there's the growth. Yeah, 400%. There's the drop. So basically, this is also pretty on a significant level. But anyway, the investing.com summary the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.